And welcome back to another episode of the Assignment of Benefits podcast. In this particular episode, we're going to be talking about a topic called, it might be a couple of different words for it. We'll call it elastic staffing or responsive scaling, but it's essentially a concept where where insurance companies can reduce the volatility of their staffing. And my guest today is Mark Zuwala. Mark, welcome back. We've spoken before.
Yep. Good to be back, Nick. Looking forward to the conversation.
Yeah, me too. Me too. Mark, we start all of these by allowing our guests the opportunity to do a little bit of an elevator pitch. Mark Zuwala, who are you? What is it that you do?
Absolutely. I'm Mark Zuwala. I'm director at Focus Services. We are a provider of insurance services, underwriting, customer service to the insurance industry. So this topic is very near and dear to my heart, to what we do. It is very, in my view, it's a very critical piece of helping insurance companies be successful. Staffing is always one of the largest expenses and challenges for any insurance company. So I think the more effective and efficient you can be in that space, it just translates to other areas of your business.
Yeah, I've engaged with Focus quite a bit, and I've had several posts on LinkedIn around insurance companies are never staffed appropriately. Like it's especially property and casualty, it's almost not possible to be staffed appropriately if you're having any sort of growth goals or if you're cat exposed. You have seasonal spikes, right? And so you need a mechanism to be able to handle that. Mark, based on your experience, why don't traditional hiring approaches work? Why do they often lead to these kinds of inefficiencies in insurance companies?
Yeah. There's a couple different reasons for it, right? One of the main ways is just the flow of new business. But when incoming new business doesn't match your forecast and you've staffed to that, that could put you at a disadvantage. That could put you either in a position where you have too much staff, and then you're trying to figure out what do you do with that staff. And there's some internal challenges that can come from that in terms of concerns about job security and morale. And inversely, if you are understaffed because the volume that's coming in is exceeding expectations, which in many ways should be a good news story, right? That puts pressure on the limited staff to keep up with the work, right? Which then typically also translates into certain frictions with the staff, but it could also translate into quality. Because as folks are struggling to keep up with the incoming volume, you start to cut corners, and next thing you may start to have a deterioration in some of your results. So I think those are some of the challenges that definitely can happen. Additionally, in different market conditions, can lead to a need to retool underwriting philosophies. For example, in a soft markets typically mean underwriters are spending more time with agents to identify the right risks to select. Right, agents have more choices because of the competitiveness in the marketplace at that point. So there's more pressure on the underwriter to make sure they've developed that risk well enough to understand the good from the bad. If you're spending more time working with an agent, evaluating the individual accounts, your overall processing time is going to go up, which again then can translate into pressures on your capacity. If you are already understaffed and your folks are taking longer to process, you're going to have more challenges of meeting your service level obligations. So that can be a problem.
Yeah, I didn't even bring up hard or soft market. Like to me, it's hard market, soft market, cat business, seasonality. Like it's truly, I think every underwriting team, I think feels like we're never staffed appropriately. And I think of the really challenging area, like when you talked about a soft market where you might be overstaffed, right? And now you have a cultural problem. So if you start letting people go, that becomes an issue as well. You deal with fair plans. And I think this is a great case to illustrate the concept of elastic staffing and responsive scaling. Fair plans have literally no control over the submission volume. So when the market gets hard, they could, like we see with the California State Fair Plan, explosion of new business that comes in, and the complete flipped opposite. Florida, you have Citizens that's massively contracting. State fair plans literally cannot control it. Can you maybe use the concept of elastic staffing or responsive scaling around that use case? Because I think that almost illustrates the extreme of what's happening, but literally like what a company like Focus can actually resolve with this responsive scaling concept.
Yeah, Nick, those are two great examples. And, I wish they were kind of the outliers, but I think what you said, both California and Florida are really good examples from different ends of the spectrum of the volatility that fair plays deal with and need or where elastic staffing can help. Because as volumes increase, right, you need to ramp up to adjust to those. But the more volatility in a marketplace, right, the more challenge there is to be able to ramp up in the right time. Anytime you're hiring, there's always a lag, right? If you kind of think through that process from identifying how much staff you need and then the execution part of that. And so you have to post, you have to recruit, you have to interview, you then select your candidates, you then source, and then you onboard. That can be a
Months.
multi-month process.
Yeah.
So think of this, as you're going through that, the incoming volume is having an impact on your business, right? Your current staff has to perform. And what happens if the forecast now changes? Let's say you have a wildfire that now is accelerating submissions, right? Or a hurricane that accelerates again submissions beyond what you've already forecasted. You've invested all this time in hiring a new hire class of, let's say, X, right? Now you may need to amp that class up by a magnitude of certain numbers. So you got to start that process all over again. All the while, your existing team is understaffed and is struggling, right? Whereas with elastic staffing, if you partner with carriers in this space who have an experienced professional underwriting staff that have the processes and procedures to be able to very rapidly understand your business, have the experience because they've done this type of work in the past. In many cases, they have folks who have worked in these type of insurance companies. You can then augment your existing staff with the staff from additional carriers. So it buys, there's a couple of things for you. It buys time for if you want to augment your in-house staff, right, to hit service levels and take the pressure off your existing team. But it also gives you that flexibility to have an established partner to work with you for the duration of that period, whether it's months, multiple months, or years. And then as that event no longer is the issue, you can adjust that staff with the vendor accordingly, as opposed to having in-house staff you have to now find work for.
Yeah. And I think what's been interesting in discussing this concept with you guys is like literally on demand. Like once you've established yourself as a trusted partner in the solution, on demand, it's literally we need a half FTE.
Yep.
And let's go. Like your team already knows what to do. And so you take that months of process of trying to find someone and squeeze it down to it becomes on demand, and vice versa. If you have to unwind, you just unwind it, right? So you don't have the cultural problems of letting people go and things like that. We've discussed this before. Like we were talking about underwriting here, right?
Mm-hmm.
Focus does more things, but we were talking specifically right now around underwriting and elastic staffing, but it can be done across claims. It can be done around these other areas. But initially, when we had the conversation around underwriting, it's almost like blasphemy. Like you would never outsource it. But I think the economics around the talent crisis indicate it. When someone's looking to augment with a third party, right? Like I think a lot of firms would be very hesitant to want to augment because this is our secret sauce. This is too core for us. When augmenting, talk about what you would look for in a third party, because I think this is not the typical outsourcing. This is because it's so core. You really need like a trusted vendor partner to partner with you through this. What should someone be looking for?
That's exactly it. And I think of my time when I was on the carrier side, underwriting, like you said, would never be outsourced. That is because every company is different, but there's that culture piece that goes with that, and that can be difficult to duplicate. So I think what the difference here is, though, is we're talking about insurance professionals, professional insurance underwriting companies, rather than staffing agencies.
Yeah.
Traditionally, I think that's where the mind has gone is I need staff and we go to staffing and we get bodies. We're not talking bodies in seats. We're talking about professional underwriters, whether it's personal or commercial. The things that you're going to be looking for are the established companies that one, insurance is really what they do, either the only thing they do or the main part of what they do. They understand insurance, they understand the uniqueness of our business. They have an established track record in terms of supporting clients they can point to where they've done that type of work in the past. And then you want to go through the process of evaluation in terms of, do they have internally, they have the right controls in place, documented process and procedures. Training is critical, right? Because you're not only training initially to get up and running, but many times you're also then retraining as program changes, as eligibility changes, as we talked, as the market changes. If we're happen to be in a shift from hard to soft, there may need to be a retraining in the middle of a specific effort. So again, you want companies, you want partners that understand that have procedures in place that allow them to scale with that. They should understand your business. They should understand your business almost as well as you do and be able to augment and represent your business to the standards that you have set forth.
Yeah. And I've heard you say many times that in the relationships that you have, when you are handling elastic staffing, you become part of the team, part of the underwriting team. Can you talk about how important that is? Like, I don't think we can overemphasize that this isn't just like traditional outsourcing. You're solving the economics around this volatility with staffing. And so they're not outsiders, they're insiders. They become part of the team.
I mean, our process very much starts with, at the leadership level, meeting with the leadership team of the company and really understanding the company culture, the company goals, the current and where they want to go, and understanding what their needs are. Again, we're not just here to provide bodies, right? We're here to provide services, but in many ways, we are here to be your partner, to be an extension of you, right? So the more we can understand your business, the more effective we can be. We model our processes as most insurance companies do. Meaning, what I mean by that is we have daily stand-ups with the underwriting leadership. We have them stand-ups with the underwriting teams just to set the day, make sure the agendas are aligned, make sure we know what we're working for. We have extensive metrics in terms of target goals for efficiency and effectiveness. We also have target goals for accuracy. And that's one part that I just can't stress enough. It has to be both. It's not just a matter of we're going to process widgets very quickly, right, at the expense of accuracy, or we're going to be very accurate, but we're not going to process things at the rate that we need to, because otherwise, if you don't have that balance, the economics don't work out. So we have processes in place to ensure that there are goals at the team level, goals at the individual level. There's full transparency and communication. So it's not just that we operate in a silo and then at some point we provide a report to the client. You want to me, one of the trademarks of these strong partnerships has to be transparency built around common goals, right? When you have those common goals, you're all rolling in the same direction, right? That's where you start to get those synergies, right? Using the corporate buzzword, but that's where it comes from, right? Is we're all moving in the same direction and we're augmenting the team in that goal.
Yeah, I see it no different than a leadership of a carrier MGA having maybe like a division. I almost feel like you're a division, right?
Yes.
And you just bring a different level of economics, but you still bring in the same professionalism to it. And all you do is just trimming the economics around the staffing so that they can probably focus more core on strategy and more executive level stuff. And I think that allows teams to be lean. And I think you also work with MGAs as well, right? It allows teams to be lean. Can you talk a little bit about that, working with an MGA and allowing them, or startup, and allowing them to allow the core to remain small so they're not operationally committed to this giant staff? They can have just enough staff at just the right time, like on demand.
Yeah. Our approach is, we're all insurance nerds, insurance geeks, no pun intended. That's where
We are.
We all ended up in this industry for different reasons, but we're all here. And I think most probably we all love it. It is a great industry. But what that gives us is the ability to understand what the client needs, right? Because in many cases, we've been in the client's shoes. So now we're able to execute the operational aspects of the strategy. So yes, there are MGAs that decide we need to launch a program in a certain state for a certain line of business. In many cases, right, we have experience in those states. We have experience in those products. We've done that. We're able to, by understanding their plans, hire a staff, train them, execute the strategy in support of the client, and then be able to scale up or down as the client grows. And in some cases, growth goes slower than expected. And when we've had situations like that where we've kept a smaller team on board supporting a client until they're ready to expand more rapidly, and then we ramp up with them. And in some cases, as we know, you've got to plateau or slow down production because reinsurance, because of capacity, because of other reasons, right? We're able to very quickly also adjust that staffing to coincide with where that needs to be. So we're not holding on. So they're not holding on to more staff than what they need, trying to figure out, well, what do we do with this expense on our balance sheet?
Yeah. You and I have been doing this for decades now. How many times think of situations where it's okay, we're going to go into a new state or we're going to launch a new line of business. One of two things is going to happen. You're either going to pre-hire, right? Incredible risk, right? Because if the submission volume doesn't come in, you have people sitting on their hands. Or you're going to wait for the submission volume to come in and you're going to underhire. Like
Right.
I don't think I've seen a situation where the hiring went smoothly and correlated nicely with that. You're either playing catch up or one piece or the other is playing catch up.
Right.
Either the submission volume is playing catch up to your pre-hiring or you're hiring to catch up to the submission volume. Either way, it can really harm the launch of a program. Talk a little bit about how, if for a firm that's like ambitious and looking to expand a new line or go into a new territory, how you would fit into that so that they correlate nicely.
Yeah, and you're spot on. I think back to my previous times. I've yet to launch a product where everything aligned exactly to forecast, right? And it really is a choice of if you're understaffed, there's a stressor to that, right? If you're overstaffed, there's a stressor, and we could debate which one creates more friction, because I think there's negatives to both. The way we approach that with clients is what the flexibility we have is because we hire a diverse talent pool. Right. We have multiple clients that we work with. We're able to flex the team as necessary. And that's important with product launches because we go through our planning process. We agree on what the staff level needs to be for product launch. We go forward, and within 2 weeks, right, incoming volumes exceed, right, our expectations, and we need to very rapidly add staff. We have a very deep talent pool. We can pull staff in very rapidly with our established training procedures and the fact that we've got documented workflows. We have a very strong internal independent audit process to ensure accuracy. We can very rapidly add more staff, right, to coincide with the incoming volume, and faster than what the client could hire directly from them. And if at any point, right, it plateaus, we're able to keep the staff as it is and then adjust as necessary. And so because of the uniqueness of our business model, we have more of that flexibility to flex our team, which becomes an extension of the client's team.
Yeah. Another concern might be compliance or security as well. Can you talk a little bit about that?
Security, obviously, both are critical to our business. And then it comes back to the procedures and policies of the partners you're working with. Right? As part of your vetting process, you want to make sure that you have folks who understand the business, that have established procedures for onboarding, for training, for underwriting eligibility, for underwriting results. There should be metrics around all those components in terms of how effective and efficient someone should be, and also what's the accuracy at which they're processing that work. The accuracy should be an independent audit team. It shouldn't be the business auditing themselves. There should be an independent auditor that has the charge to ensure the accuracy is there. And there should be transparency in results. For us, we're huge advocates of voice of the customer, both internal and external, right? And that's up to our clients to determine who the voice needs to be. But we're very big on NPS, Net Promoter Score, to make sure that we're getting the voice of the customer. And we share that feedback on a regular basis with our clients with full transparency, both good, bad, and indifferent. And we find it to be invaluable to identify trends, to identify feedback, all aspects of the business, not just the operational side, but in many cases, what is the view of the product? What is the view of pricing? What is the view of your distribution plan? In many cases, feedback on agents, good, bad, or indifferent. And again, that it just puts more information out there for the client to be able to understand how the business is performing and to react accordingly.
And what about technology security?
Yeah, technology security, you want to make sure that obviously you have the right logins and document procedures for onboarding, changing, modifying, and then offboarding the access to the systems. Because without that, you can get yourself into some trouble.
Yeah. I've had conversations with folks around this topic, and it's fairly new, and it's not, and as we said, it's almost blasphemy to think of anyone but internal staff doing underwriting. But I think once people get used to it, there's, oh, that's interesting. For someone that's like in the initial stages of, I want to learn more, how how does that firm need to start to think about preparing themselves for doing something like this? I'm assuming starting small is usually helpful.
Usually,
Dip your toe in the water a little bit, but how does a firm know when they're ready to be able to do something like this?
yeah, I would say at the beginning, you need to understand what your staffing need is. And is it a short-term, long-term staffing need? And what does it support? You comment earlier, right? You want to partner with insurance professionals, not staffing agencies. When in some cases, if the need is more of a short-term need because of maybe a short-term a shift in seasonality, right? There's other options the client may have internally to find capacity for that, whether it's through shifting of other teams, whether it's the use of overtime, right? There's ways that you could potentially fill that need. So what you don't want to do is go through a vetting process to bring on a partner only to find out that, right, your need is very small, right? Because it's not going to be a great outcome for either side. Once you understand what your staffing needs are, I think you want to go through a vetting process of finding the right partner, not just I would call it foundational nuts and bolts of, do they have the right training? Do they have the right knowledge and experience? But are they a culture fit? Are they a culture fit for your organization? Do they have a established track record of success? There's a lot of players in our space. I would look for folks who have demonstrated the fact that they've done this, right? Whether it's starting new insurance companies or new MGAs or helping existing ones grow. And again, to me, I would be looking for, right, examples of where best aligns to kind of what you're trying to do. If I'm an MGA looking to launch products, looking for someone who has experience in those products, who has experience taking a partner from one PIF all the way to X number of PIF, whatever that looks like.
Yeah. Let's finish off with competitive advantage. I don't think we would be having this conversation if we didn't think that this could create a competitive advantage. I'm giving a presentation at the end of the month, and it's on the talent crisis.
Yeah.
I'm literally going to be waving the white flag.
Yep.
Like, to me, I think ever since I've been in insurance, Mark, we've been talking about the talent crisis, and I think we lost, right? And so juxtapose the next 10 years, firms that adopt a technology mindset and an elastic staffing mindset versus those that don't. Talk about the differences in competitive advantage around those two models.
Yeah. Agility to respond to the full range of market conditions we've talked about, right? And whether it's hard, soft markets, cat response to events in real time in support of growth strategies, right? I think that's one of the huge advantages of having this elastic staffing approach. I think the other one is there's a cost component to it or an expense savings. Labor is always one of the top expenses for any insurance company. And the amount of time, I always look at staffing from a time investment, right? How long will it take me to get one body from the concept of I need to hire someone to they're now here in the seat, and more importantly, they're now actually functioning as an underwriter or a CSR, right? Because it's not just hiring and getting in the board in the organization, getting them onboarded. There's now a ramp up period for them to be an effective underwriter. That definitely takes months. You're looking at a window of easily 6 months, right? So companies that can shrink that by partnering with companies like Focus, who have an established talent pool, who have experience in doing this, can bring qualified and knowledgeable staff to projects, you will have a leg up and you will on the competition, and you'll be able to respond more rapidly to different market needs and in support of whatever strategic goals you have.
Yeah. I think margins are so thin on some of these products. The labor and overhead become just a huge, have been, but become a huge issue. And like you said, I just think there's hiring itself is just so inefficient. Even the larger firms with big recruiting teams are struggling to fill. And I'm so concerned about this next wave, this next generation, and the ability for insurance companies to survive and be there. Mark, I want to thank you for coming on and explaining this particular concept. For one, we'll be like with a megaphone screaming this out loud, and it's firms like yours that I think are just gonna be a new model, and we'll look back and we'll say, why didn't we do this sooner?
I absolutely. Nick, as always, really enjoyed the time. Love talking insurance. Any chance I get an opportunity to do, I love it. This is also why we're not the life of the party at most cocktail events, but that's okay. But yeah, I absolutely agree with you. I think I look back to my career early on for carriers. We typically didn't have an option to really outsource underwriting.
No.
Outsourcing at that
This
point,
this wasn't a thing.
right? It was in more of your technical space because of the high burden or high requirement for qualified, experienced individuals. When the market has changed, and it needed to change because our industry supports so much more of our economy, and there's so much more volatility, I would say, in our industry that carriers have to have that agility to be able to respond to changing business needs.
Yeah. Yeah. If you get a bunch of insurance nerds together, we could theoretically be the life of the party.
Good, but I don't know. That might be somewhat a different party.
Yeah, okay.
So,
That remains to be seen.
yes.
But Mark, thanks a lot. I appreciate it.
Okay, take care.